YMM Investor Relations held a conference call today to discuss the company's future performance and provide an update on their financials. Management was joined by Mr. Hui Zhang, founder, chairman, and CEO, and Mr. Simon Cai, CFO. The discussion included forward-looking statements and non-GAAP financial measures. A webcast replay of the call will be available on the company's investor relations website. Now speaking, Hui Zhang, founder and chief executive officer. FTA delivered strong growth in the first quarter of 2023, boosted by China's economic rebound as the pandemic subsided, with activity increasing following the Spring Festival in January. Peak daily fulfilled orders and active user numbers hit an all-time high of 30.3 million and 1.75 million respectively, up 20.5% and 23.3% year-over-year. Total net revenue grew by 27.7% to 1.7 billion Chinese yuan, while adjusted net income surged by 171.4% to 514.8 million Chinese yuan. The company implemented a rating system and strengthened its mechanism to improve user experience and will continue to prioritize user acquisition, product and service expansion, and platform stickiness to advance long-term growth. As of May 21st, FTA had repurchased approximately 5.6 million ADSs for $37.4 million of its $500 million share repurchase announced earlier this year, and Mr. Langbo Guo was appointed as a new director and promoted to president of the company. Now speaking, Simon Cai, chief financial officer. In the first quarter of 2023, Mr. Zhang reported on the operational highlights and financials of the company. Fulfilled orders grew by 20.5% year-over-year, with a 30% increase in March, surpassing expectations. The truckers' engagement reached pre-pandemic levels, transportation costs decreased, and the user retention rate and engagement level continued to improve. The average fulfillment rate for the first quarter was 28%, increasing 6 percentage points from the previous year, reaching 30% in March. Non-negotiation-based transactions made a record contribution, and the median matching time returned to single digits. Average shipper MAUs increased 23% year-over-year to 1.78 million in the first quarter, and 3.55 million active truckers responded to orders in the past 12 months. Total revenues were 1,702.3 million Chinese yuan, representing an increase of 27.7%. Cost of revenues was 849.4 million Chinese yuan, and sales and marketing expenses were 245.7 million Chinese yuan. Net income for the quarter was 411.4 million Chinese yuan, and non-GAAP adjusted net income was 514.8 million Chinese yuan. As of March 31st, the company had cash and cash equivalents, restricted cash, short-term investments, and long-term deposits of 25.8 billion Chinese yuan. Business outlook for the second quarter is expected to reach between 1.91 billion Chinese yuan and 2.01 billion Chinese yuan in total revenues, representing a 14.5% to 20.5% year-over-year growth. Goldman Sachs analyst Ronald Kung inquired, did our 20% year-on-year fulfilled orders growth in the first quarter outperform the freight market and macroeconomic recovery? What are the main drivers behind this growth, and what can we expect for the second quarter? Simon Cai replied, we experienced rapid growth in freight orders in the past quarter, surpassing market growth. This was primarily due to two factors: the pandemic's impact largely easing and increased online trade matching preference from truckers and shippers. Our efforts in user acquisition have paid off, with 48% of food orders coming from low to medium frequency shippers in the first quarter, up from roughly 40% a year ago. We also improved our matching capabilities and algorithms, such as by improving address infrastructure. For the second quarter, we expect the number of fulfilled orders to maintain rapid growth momentum, with repeat orders increasing about 40%. SIC analyst Julu Li inquired, I noticed that the fulfillment rate increased 28% in the first quarter, compared to the same period last year and the previous quarter. What were the main factors that contributed to this improvement? What is the Simon Cai replied, in Q1 of this year, our supply and demand dynamics improved significantly due to an increase in available truckers and a higher proportion of direct shippers. This allowed us to alleviate the headache of insufficient truckload supply and optimize user composition, resulting in a fulfillment rate close to 50%. We anticipate further growth in the second quarter, with FTA's expanding market share and more direct shippers driving procurement rate growth. China Renaissance Securities analyst Charlie Chen inquired, have I seen any changes in revenue from freight brokerage business compared to previous quarters? What are the main reasons for that decrease? Could you provide more information on operational strategies for your freight brokerage business? Have there been any changes in tax refund? Simon Kai replied, "We provide freight brokerage services to shippers, entering into shipping contracts and matching truckers. We charge 6% service fees on shipping fees, one of the highest in the industry, and provide protection against fee increases, delays, and cargo damages. Our data shows that shippers using our brokerage service tend to ship more frequently and there is a large demand for it. We maintain strict risk control and contribute to local GDP. Our commission business contributes more to profit growth than freight brokerage, so an adjustment or termination of the latter will have minimal impact on overall profits. We manage its growth rate carefully to reduce cash flow impact." Citi analyst Brian Gong inquired, "I noticed that transaction commissions experienced a 55% year-on-year surge in the first quarter. What are the key drivers of this increase? Additionally, China's Ministry of Transport released a work plan to lower standing excessive commissions and platforms. Will this affect?" Simon Kai replied, "In Q1, transaction commission revenue grew due to a 38% increase in order volume year-over-year. Our business team makes dynamic adjustments to commission rates and penetration for growth in revenue, user activity, and business skill improvement. User base and order intensity have continued to rise and we plan to expand commission orders and prudently increase commission rate. Regarding the Ministry of Transportation's proposal to reduce excessive commissions for transportation platforms, our commission rate is already low and AllianceBernstein analyst Cherry Lung inquired, "I have been tracking the progress of my new user acquisition strategy for shippers and truckers. Can you provide an update on the numbers of new users acquired on both sides, as well as any key focuses of the strategy?" Simon Kai replied, "In Q1, Full Truck Alliance implemented strategies to acquire new users on both the shipper and trucker side. On the shipper side, they promoted their brand online and offline to attract direct shippers from over 30 million SMEs in China. For truckers, they have covered most of the heavy-duty drivers and are expanding reach to smaller trucks as pandemic activities resume. They also focused on reactivating dormant drivers through incentives and providing amenities such as service stations and care packages for truckers. Looking forward, they will continue to attract more high-quality truckers and shippers to sustain growth in user scale and transaction volume."